So the third abnormal situation is under basis period is the cessation of business, right? So this is when a company decides to, oh, we're not doing again, we want to cease operations, they want to fold up, liquidate, wind up, cease operations. So some people are making me laugh in the background. So that's what it means, okay? And it's already dark, oh, but I must finish this video. Okay. So remember I said in commencement, it focuses on 3 years, year of commencement and the 2 years after. In change, year of failure and the 2 years after. In cessation, it focuses on 2 years. The law focuses on 2 years, which is the year that you are seizing, right? Which is called the ultimate year. Ultimate year, as in pata year, right? The year you're season called the ultimate year, and the year before the year you're season. This one it is not after. The year before, which is called the penultimate year. The law says identify the ultimate and the penultimate year. And you already know that the ultimate year is the year that business closes. So you know that that's 2021. Then the year before is the penultimate year. Then what you need to do is to assess for tax, right? Assess the penultimate year for tax based on preceding year basis and actual year basis. And also assess the ultimate year for tax by giving it a basis period of 1st of January, ultimate year, that is 2021, to 31st October 2021. As in, from the beginning of year, which is always 1st of January, to what? Cessation date. And this is actual year basis now, because actual year basis means that actual year 2020 tax year, that is all the profit I made in 2020 is what you're taxing, right? Which is kind of unrealistic. Like, why does the government even do preceding year basis? Because you don't even know the profit you will make in 2020 now, and there's a deadline. They say you must file before, you must pay and file and everything before June 2020 or 2021, right? So when a company closes on 31st of October 2021, the law says that you should assess that company for tax by starting from 1st of January of that cessation year to the date of cessation. That's actual year basis. But for the penultimate year, do preceding year, which will be 2019. Also do actual year, which will be 1st of January 2020 to 31st of December 2020, and pick the higher, right? You know why you're picking the higher? Because it is your choice to close the business, right? So in this aspect, it is the interest of the tax authority that will prevail. In change of accounting date, it was also your choice to change the accounting date. They did not send you. So it is the interest of the tax authority that will prevail. But in commencement of business, you commenced business, you are contributing to the economy. So at that point, it is your own interest that will prevail. That's where there is lower. So it's only in commencement that you have the lower. But in change of accounting date and cessation is the higher that is picked. Here, there's a right of election. And the right of election grants the tax authority the right to assess you based on the basis period that gives the higher tax liability, if that makes sense. So when we solve an example, it will make sense altogether. So this example says PhD Limited decided to fold up its operations with effect from 31st March 2009. What is the date of cessation? Ask yourself. PhD Limited, right? PhD Limited. Date of cessation. Cessation date is what? 31st March 2009, right? So they've been operating and they decided to fold up on 31st of March 2009. Now let us read further. As a result of difficulty in getting enough contracts. So using the information below, that is, they've given you some information, you are required to determine the basis of assessing the company, right? So they gave you year ended, let's write it out. So they gave you their corresponding profits. So let us put that there. Okay. So what you need to do, like I said, is to get your ultimate year. Ultimate year is the year they closed business. It's 2009. Write it down. 2009. Then the year before, 2008. That's all. And right on top, tax year. So you get the basis period for 2008 tax year, which is the penultimate year. And remember that I said the penultimate year, you do the preceding year basis and the actual year basis. But for the ultimate year 2009, it's just going to be government year. No, government year is 1st of January to 31st December. So it's just going to be 1st of January to cessation date. That's what we call actual year basis. Government date is just like similar to actual year basis. So 2008. So ask yourself, what's their accounting year end? Obviously, the accounting year end is 31st December, right? So you already know you are doing the preceding year basis now. Preceding year basis period, right? Preceding year basis for 2009. So you already know that what a tax year of 2008, the basis period must end in 2007. So you already know that this far end is 2007. You would have 2007. When did they prepare their accounting to? When did they prepare their accounts report to? Is what 31st December, right? So you count back. That would definitely be 1st January 2007, right? To 31st. That makes sense. Also, you already know what this one will be now, which is you can't say it's going to be 1st of January 2008 to 31st of December 2008. No, you just assess them directly based on what the law says, right? The law says that you should assess them from 1st of January. This is the ultimate year. 1st of January of the cessation year, which is 2009, to cessation date, 31st of March 2009. That's all. That's all. Then we get the profit. Should we get the profit before we go? Okay, let's get the profit. No, let's do the basis period for actual year basis. So we've gotten preceding year basis. Now let's go to actual year basis. So we have 2008, we have 2009. So actual year basis for 2008 is going to be what? 1st of January 2008 to 31st of December 2008. That's it. How do I know that it's 31st December? Because the accounting year end is 31st December now, right? 2008. So 31st December 2008. Count 12 months back. That will be 1st of January 2008. And from here, it's going to be 1st of January 2009. This one makes sense. It makes sense so well because there is no gap. But here you can see that there's a gap, right? But that's what the law says. So 1st of January 2009 to 31st of March 2009. You can't say to 31st of December 2009 because there was no business at that point in time. Okay, so let's get the profit for those periods. So if you want to get the profit, 1st of January 2007, 1st of December 2007, that's like year ended this, right? So the profit is 324,000. You pick that. Then for this, 1st of January 2009 to 31st of March 2009, see 31st of March 2009. But is it, what does this thing mean? Period ended or period to 31st of March. Let's interpret this thing. What does it mean? This is how we will interpret it. That is what started this period. What started this period? I say period ended. Let us interpret it like how is they come about it? So if this one ends here, definitely next will be 1st of January, right? 2009. That is the date after this to 31st of March 2009. Oh, it's even very straightforward. They've already given us the 3 months. So all you need to do is to just fix it there, right? 3 months, and that is how much? 150,000 naira. We're not prorating anything here because it was pretty straightforward. So when you add this together, you have 474, right? 1,000 naira. So you cannot decide. You can't decide yet until you get for this and you now decide which is higher. The tax authority will assess based on which is higher. Nobody then send you, may you go close business. So we are looking for 1st of January 2008 to 31st of December 2008. Look at it here. Can you see? Year ended. Can you see it? So you pick 180,000 naira. Very easy. We're not prorating anything. 180,000 naira. Then you're looking for also this one. No, it's going to be the same because irrespective, the change is only in the penultimate year, not in the ultimate year. This one is still the same thing that is here now. So you have your 150,000 naira, and by the time you add it, you have 330,000 naira. Of course, the government will tax you based on what? Preceding year basis. So you know how to write your comments based on the computation above. PhD Limited will be assessed to tax under the preceding year basis of the commencement. We just put the English like that, but state it that because 474,000 accessible profit is higher than 330,000 accessible profit, which will lead to a higher tax liability and all of that. So obviously, the tax authority would assess them based on preceding year. It won't do actual year for them. Okay, so I hope you understand this example Yes, so we have come to the end of basis period. I apologize because I was supposed to solve two questions each, but I just don't want it to be so. I don't want the video to be too long. And sometimes when you just see a video that is too long, you'll be like, you need the points. So people will not even want to click it if the video is too long. And I will also try to break this video down into maybe 3 videos for yes, I'm going to definitely break it down into 3 videos. So thank you so much for watching. If you have questions, I believe that if you someone one or two people will have questions, please put it in the comment section. You don't have to understand it by watching it once. You can watch it again. You can check other textbooks. Okay, so I hope you understand. If you understand, please let me know in the comment section that you understand. Tell me what you want me to improve. Maybe you want me to write clearer, or you want me to use more difficult questions. Also suggest topics in accounting specifically, that you might want me to do a small lecture on, or that you want me to explain further. Thank you so much for watching. Don't forget to share this video, especially with 100 and 200 level accounting students. Share it with them, subscribe, give it a thumbs up if you like it, and I'll see you in my next video. Until then, stay safe. Bye.